Hey everybody, in this video I'm going to be doing the week 1 of July review, and so that covers the trading days between the 3rd of July and the 9th of July. This will be primarily on the Phoenix, though I will touch on the other algorithms as well, but you want to pay attention at the end of this the review. I am going to discuss also this change that was made effective over the weekend to the Momentum S&P and the Geronimo S&P algorithms. And really the short version of what the change is actually nothing drastic. It's not a big change, but it is moving from a point-based target to a percent-based target. And I'll talk more about what that means when I get to that section. But before we do, let's just jump into the risk disclosure. So as you know, we are not a CTA. Well, we don't give financial advice. We offer the algorithms under letter of direction, which allows people to trade them through auto execution brokers that are NFA registered. Remember that trading futures does involve substantial risk of loss. It's not appropriate for all investors, so keep that in mind. Also, past performance is not indicative of future performance. All right, so let's first look at the kind of this first week of July, how the algos did. So the grade that I gave them was a D-, and that was really because we had pretty big loss of about $1,400, which was about a 7% loss. And that was primarily from this losing trade that I'm highlighting right here. But let's just start up here though. So if the top left, again, that's the 10-year note. And remember, we got into that trade on the 14th. As of the 9th of July, we were still in that trade. Notice how it's up quite a bit though. And in this week, the 10-year actually rallied quite a bit, which was good for us. If you look, the week started on the, on the 5th, which would have been right in here, on the half day due to the 4th of July celebrations. But so between then and the end of the week, the 10-year actually was up quite a bit. So the 10-year has done good. It's up. It continues to do well. The breakout day trade, that's this one over here, that continues to be the real star of this algorithm. I mean, it's now had another really nice day trade, and that was the trade that it had on Friday. So on the 9th of July, which was Friday, we had a really nice day trade there, and I'll show you that one too when we look at it. But the algorithm, the reason why, if it wasn't for this algo here, certainly we would have gotten an A. A plus is really where we were at. But this algorithm here delivered an F, and so I wanted to instead of giving it a D minus, really just because of I think the emotional swing was kind of tough. But so again, it's a good reminder that none of this is easy and that losses do come. But I do want to talk about this. So let's go ahead and look at the charts, and we'll look at each one of these a little bit closer. Okay, so here's just all the different charts, same that were on the PowerPoint slide, but now we're looking at them through TradeStation, so I can kind of highlight things a little bit easier. But again, here's that 10-year trade. 10-year did really well. We're still in that trade, and if you look here, this is that breakout, and this is the one that again had a really nice trade on Friday. We got in at 43.37, and it actually held until the close, and then got out at about 43.60. So that was a pretty big trade for us. That was a gain of about 23 points. About 23 points. So about $1,100 is what that was, $1,150 I think. But really, really nice trade. It definitely helped offset the losses that we saw on the momentum. But let me go ahead and zoom in on the momentum. So just to give you a frame though, what you're looking at here is this is back on the 16th of June. This is the start of July in here, the 1st of July, 2nd of July, and really what we're covering in this review is from this point forward. So let me zoom in a little bit, and we'll talk about kind of what kind of went on. But basically on Monday you had a half day because of the holiday, so that's why there's only one candle on that day. Totally normal. Whenever there's the holiday, that's how it works. Now what happens though is instead of buying at the close on the holidays, it'll buy at the next candle's open, which happens to be at the open in the morning. And that's how it's designed. So there's nothing off when that happens. It's just how the algo's written. So it got in though, and it actually got stopped out, so that was a stop out, but just a normal stop out. What happened though is it then got in at the close, and this is where it got tough for us, because the next day we were actually up. As this chart shows, it was actually up a decent amount, and at that point it looked like, we were just going to keep adding to the gains that we had seen the previous 2 weeks. But then we had the market gap down quite a bit, and it actually gapped all the way down here. Now what this doesn't show is that there was actually a stop out in the overnight session about 10 points below here. So we got stopped out, and that was a pretty big loss. I mean, that was a loss of about 50 points, so pretty big hit that we took. Then the market opened, rallied a bit. We ended up getting in at the close and had a quick target, which was good, so it helped offset it a bit. But this was a tough trade. I mean, I'm not going to lie, that was a tough one to see. And I know for our, people using the Phoenix algorithm, the swing trader, the pro, the crusher, that was pretty tough. I believe that the Geronimo, the wave trader, avoided this because it tends to not trade as often at certain times, which is why it can do, can outperform for sure. But the Phoenix, the one we're reviewing here, it did take that loss. So that wasn't a fun trade. But then what happened is on Friday, we had this monster move, and we at least got in on the day trade, which was good. So we had a good win on that, which helped kind of alleviate some of the pain from that trade. And then the 10-year, because it had rallied, it also helped offset. So overall, though, these kind of trades are really tough emotionally. I mean, they're just tough to go through. So it is something that happened, and we're owning up to it. But it is something that that when it happens, it's not fun, but it should happen, not often at all. I mean, in the back test, these kind of stop outs are just not that common. And they typically are offsetted by the occasional really big trades like we had way back here. But enough about that. I mean, that's how we did for that week. Let's go back to the PowerPoint now. So here's the PowerPoint, and again, we got a D-. Here's a summary, down 1,400. It would have been worse had it been not for this kind of day trade. So, but overall, not a great week. So I gave it a D-. One of the tougher weeks that we've had. Okay, so what I want to show you now is the change that was made. Now, in order to do this, I want to show you the two algorithms sort of side by side, or kind of one on top of the other. This top one up here, this is the one that we've been running, and the one that that we've ran since we started the Phoenix program. And what you'll notice is that, and the one on the bottom is, by the way, that's the one with the change that we've implemented. Now, the change is very subtle. It's a change that's applied to all of the algos, so it's not specific to the Phoenix. It's actually across the bullfire, the momentum. So any algorithm that uses this discrete kind of bullfire / momentum ES algo is getting the change. So everyone's seeing the change. Now, the first thing I want to say is the stop has not changed. We still use the same stop. It's a 17-point stop. So when we get into a trade, we have a 17-point stop, and there's no difference there. But where the difference is on the exit. So this top one, since it was last optimized, which was quite a while ago, it used a 4-point target whenever it was using a target. So there's times when this algorithm will have a target, and there's times when it won't. Right here's an example where it didn't. It got in and it held this entire day. In other words, it had no target, and that's because the algorithm saw something that said you should hold for the entire day. Same thing happened here, but then what happened is at the close of this candle, it threw out a target for the open of the next candle, and that's where this exit occurred. So that's kind of how that works. And then it got back in at the close right here, and it hit its target pretty quickly. Notice how it went from 4256.5 to 4260.5, if you can see where it says strategy there. Well, that's the kind of that's that 4-point target that I mentioned. So it doesn't always use the 4-point target, but sometimes it won't have a target, which is the same as saying it just has a really big target, is another way to look at it. But so it won't have a target, doesn't have a target, then finally has a target, and then it gets out at the open when it sort of opens above that target. But then here it gets in, gets out real quick, probably within a couple minutes is how this would have gone. Here's one where it got in and got out at the open the next day when it kind of popped a little bit and got out. Here's one where it got in, you had a gap down, and then it rallied, hit the target. But the change that was made is instead of using a 4-point target when these kind of events occur, it's using a percent-based target now. So so that 4 points, back when this algorithm was optimized with it about 4 years ago, the S&P was at a much lower level. It was more like in the 2,000 to 2,500 range as opposed to the 4,000 to 4,200 range. And so 4 points, obviously back then, was more than what it is now on a percent basis. Now on a dollar basis, it's the same with futures. But the main reason you might be wondering why we didn't make this change sooner is because it never really caused any issues. And my default is to always do the minimum amount of change when a change is required, because you don't want to break an otherwise good algorithm. So you want to make very subtle changes. And this algorithm has really been live for so long that it's always a big decision to make any change at all to it. But in this case, the decision was made to go ahead and move to that percent base. And the reason why is because when we have an up moving market like you saw here, and if I zoom out, you'll see it really clearly. And so for the month of June, the market, the S&P actually was up, but we actually were down a little bit. And if you look, here's kind of the end of June. So for June, the market was actually up, but we closed June down a bit. And that's really that happening this month, and then a couple other months where you could see a similar kind of thing is really what's driving this. So what the change that's being made is, instead of getting out with the 4-point target, we get out when a percent target, when the equivalent percent from when it was first optimized is hit. Now the effect of that is that when we have a pop in the market and the market goes higher, here's a good example. So instead of getting out, notice this trade right here. Let me try to zoom in a bit because it's a good example of what this difference will look like to my customers. So again, here's that trade where we would have bought on the 28th of June at 42.80. We'll just round to 81. And then we would have got out at 42.85. That's that 4-point target. That's so 4 points, each point's $50. That's a $200 gain. Well, the equivalent one over here, and we got in at the same price, 42.81. So again, the entry logic is all the same, but now it actually gets out at 42.89, and we'll just round to 42.90. So now instead of a 4-point gain, it's more like a 9-point gain. And that's really because of that percent, because now the percent that it uses is almost double what it was back then. And so that change, what it does, it allows us to capture more of the upside. And I do think that this is going to help quite a bit with the returns. It's a change that in some ways won't be that noticeable, but in other ways it will be. Sometimes it is more likely that we will hold overnight because there's going to be more of these cases where we get in and hold the next day for a little bit longer. But there will be also cases where we don't. In fact, the trade that we had on Friday, this one here, actually that was Thursday, I believe, at the close, where we bought and then got out pretty quickly up here. Same thing happened here, where we bought in and then we just got out because it still hit that target. But the bottom line is, when I optimize this, the performance actually, there is a really good improvement in performance. So the change was made to the Momentum ES. A similar change is made to the Geronimo. So for those of you that are trading the legacy algorithms like the Wave Trader or the Pro Trader, you'll see this change on that as well, on the Geronimo algorithm. It's all seamless. You don't have to do anything. This is applied to everyone, so it's not anything that there's no decisions that need to be made. The letter of direction does allow these kind of things, so it's a change that's applied to all accounts. It's just a fundamental change in the algo that you're already trading. So it's the same. Everything is really the same. Now, if anyone wants the back-tested results of this updated strategy, then just let me know and I'll send it to you. I'd be happy to send you the compiled back-tested returns for this algo in case you want to see it. Because it does have a subtle impact in the returns when you look at the back-tested data. So now the final algorithm then that's traded with the Phoenix is really the same kind of thing. It's the 10-year note, it's the Phoenix day trade, but now it's this updated momentum algorithm. And there's going to be some trades that are similar, some that aren't. It still would have had that big stop out that we saw, but the difference is it captures a lot more on the upside as the market's going higher. And I really do think this will give us kind of a dramatic improvement. But thanks so much for watching the video. If you have any questions on this change, feel free to let me know. I know it's always a little scary for people when they hear that something's changing, but this is very common in algo development. It's very common that as things are noticed or things don't look quite right, changes can be made to the algorithms and they're applied so that everyone sees them. This is all good stuff, and it's common to see changes. Usually the changes are done on a yearly basis, so usually every year I'll do an analysis and then make any updates that need to be made. But in this case, I decided to do this kind of at the end of the second quarter, just to get it going because of just where the S&P's trading at, and everything about it, is clear that it's the right thing to do. So thank you so much for watching though. If you have any questions about this or the performance, anything at all, feel free to let me know. Shoot me an email you can reach me at the sales@AlgorithmicTrading.net. But thanks again, and yeah, I'll sign off with just the standard risk disclosure. Just remember, this is not for everyone. Trading futures does involve risk. But if you have any questions on the algos, reach out to me and let me know. Thank you so much and have a great day. Bye-bye.